Hi, it's Thursday, October 1st, and here we are with the trade of the day. It's a bond trade, and it's a decent trade when you consider, or the results are decent when you consider that tomorrow is the employment report that is likely to decide whether the Fed raises rates in October. Okay, so here we go today. Early on, rally up. I don't see a trade there. Back down, back up. And what we get, a little bit clearer over here, is a slightly lower high. Okay. And you can see that the big trend line here is going to be violated as it is here, and here's the smaller trend line. So you may be, that in itself is enough to get you thinking. This dotted arrow here I drew in as usual. That's where we're going to get short. This arrow here, purplish, is software drawn. And one of the things to note is that the day has been a mess as far as the indicators are concerned. Here you have down, then prices go up. Here you have two downs and an up arrow. Prices go up. Here we've got more look for down, look for down. Then naturally a look for up just when you're out of it, and here's a look for down. And when you get the down, you have a trade. Look over here, and it happens on the other chart too, but I've drawn it in over here. Here you have a rising value between these two peaks. This is a peak here. Well, actually, I've got this kind of in the way pessimistic, way optimistic spot. It's actually down here, isn't it? This is rising, and this is declining. That means something's wrong. And it's either going to go up or go down. It just can't behave like that. And same thing here, but it's less pronounced. You get peaks that rise when they should be going down. So something is amiss. Take your trade. You get short, you stay put. This doesn't talk. This is just juking around, just the players playing. And then finally we get over here and we get this red bar, which means something has changed. Even though it's red, and I normally have red as going down after all this stuff, the main thing it means is that attitudes have changed, and since they've been going down, my guess is that they're about ready to go up. If we look over here, we see that we have some action here that drives price down, and we have recovery here, even though it should be a down bar, you'd think. The bar is down. You'd think the next one would be down, but no, we get a recovery. And we come down, and by golly, if we don't have two red bars here, the second one being exactly the same time as that, we all know that I'm cowardly and would have gotten out on the open of this bar, but even if I had to stay put, this bar doesn't look, and you can see it better over here, it doesn't look like anything I want to stay put on. So you get out with 16 or 17 ticks, $500 or so, which again isn't a bad day and certainly makes the week rather a good week. Okay, tomorrow, early on, we're going to have the employment report. Trading that report is very risky business. You might want to wait, certainly I will, until the market settles in and decides where it wants to go, and then try to pick up a few bucks if something sets up. So that's the end of Thursday. We'll see you on Friday, October 2nd.